Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the earliest. Now, Geojit is a well-known financial services firm from India. Here, we present 5 stocks which they think can turn out to be potential multi-baggers going forward. Also friends, the way to play this information would be, you should go ahead and add these stocks to your watch list and monitor them for positive developments which would make these stocks warrant a place in your portfolio. Please don't treat these as blind buys. Please go ahead and analyze this information and conduct your own financial analysis prior to acting on any of the information that is present in this video. Please watch this video to know more. Now the first stock on the list is Bharat Electronics Limited, and which is a personal favorite of mine, and this stock is available at 176.90. Now Bharat Electronics Limited is engaged in design, manufacture and supply of electronics products / systems for the defense requirements as well as for non-defense markets. The company's principal products services include weapon systems, radar and fire control systems, and also communication systems. Now, if you were to look at the one-year chart for the company, you would see that this company has created some wealth for its shareholders. The market cap is 43,464.17 crores, which means that the company is a large cap one. The EPS is 6.93, which translates into a price to earnings ratio of 25.53. The industry PE here is 28.52, which is largely in line with the company's PE. The book value is 30.56, which translates into a price to book ratio of 5.79, which is a bit on the higher side. The dividend yield is 1.27, whereas the promoter holding here is decent at 66.72. Now, the 52-week high for the stock stands at 193.40, whereas the 52-week low stands at 132.36. Now, if you were to look at the reasons why this stock has been recommended by Geojit, BEL has 37% market share in the Indian defense electronics market. Its core capabilities are in radar and weapon systems, defense communication and electronic warfare. BEL has limited competition from other private players due to its niche capabilities and strong technological tie-ups. Further, with the strategic nature of projects, capital intensive kind of business and high gestation periods, this company would generally find itself in a position where other companies would not be able to so easily enter the business and take away market share. Also, BEL's valuation has significantly re-rated due to strong order inflows and improvement in earnings profile. Given its robust order book and healthy order pipeline, Geojit continues to maintain a strong buy rating for the stock. List is Bank of Baroda. Now, Bank of Baroda is currently available at 167.15, and the code for the company is BANKBARODA. Now, Bank of Baroda is engaged in providing various services such as personal banking, corporate banking, international banking, small and medium enterprise SME banking, rural banking, non-resident Indian services and treasury services. Now, if you were to go ahead and see the chart, you would see that the stock had a major move when there was the announcement of the PSU bank recapitalization, and of late also there has been a huge movement. But on Thursday this stock declined somewhat, and the market cap here is 38,619.17 crores, which means that the company is a large cap one. The EPS is 4.18, which translates into an expensive price to earnings ratio of 39.99. Now, this is much more expensive compared to the industry PE of 24.71. The book value is 174.44, which means that the company is available at a price to book ratio of 0.96. Now, with this company being available at below price to book of 1, this company seems intrinsically cheap. The debt to equity is 0.7442, whereas the return on equity is 0.0324. The dividend yield here is 0.72. The promoter holding here is 58.70. Now, as far as the 52-week high is concerned, the company is available at a 52-week high of 206.65, whereas the 52-week low is 133.50. Now, if you were to look at the reasons provided by Geojit, Bank of Baroda is one of the largest banks in India with strong domestic presence spanning across more than 5,400 branches. The bank's new management is gradually reinstating confidence through major changes in operating structure, which will start yielding the desired outcomes. Further, they also like the management's focus on cleaning up the balance sheet and laying the foundation for sustainable growth. Moreover, gradual improvement in asset quality will lead to better profitability going forward. They continue to prefer Bank of Baroda among public sector banks owing to its better capital position, able management, and higher provision coverage ratio. The third company on the list is InterGlobe Aviation Limited, which is available at 1238.05. Now, the code for the company is INDIGO, which is Indigo. InterGlobe Aviation Limited is engaged in the provision of passenger services, and the company is engaged in the business of providing domestic and international scheduled air transport services under the name of Indigo. The company's segments includes domestic, which provides air transportation within India, and international, which provides air transportation outside India. The company operates on a low-cost carrier business model. Now, if you were to look at the one-year chart, you would see that the company was on an uptrend for the initial part of the year, but since then has been consolidating. The market cap of the company is 47,579.88 crores, which means that the company is a large cap one. The EPS is 59.59, which translates into a price to earnings ratio of 20.78, which is available at a discount to the industry PE of 25.55. The book value is 98.93, which translates into a price to book ratio of 12.51, which is a bit on the higher side. The debt to equity is 1.0507. The dividend yield is 2.75, whereas the promoter holding is 77.91 and is pretty strong. Now, the 52-week high is 1346.70, whereas the 52-week low is 815. Now, some of the factors which make it enter Geojit's favored list are: Indigo is one of the most efficient low-cost carriers with a market share of 40% in the Indian aviation sector. Its passenger traffic grew robust 31% CAGR versus industry growth of 15% CAGR over FY14 to FY17. Now, with an expanding market presence through robust fleet addition and firming up its regional connectivity plans, this company is expected to do well going forward. Although the fuel cost price rising is a major disadvantage, and with this rising, the major advantage which it was having of the fuel cost being on the lower side is now fading. With higher prices, they expect rationalization of ticket prices, giving limited scope for absorption of higher cost. Geojit are positive on Indigo, giving increased air travel penetration, market leadership position, and strong balance sheet. Also, there are statements of intent from the company in terms of it trying to acquire Air India's international business. So, a lot of positive developments going on for this company. Company on the list is National Building Construction Corporation Limited, which is NBCC, and the price for this stock is currently at 234.95. The code is NBCC. Now, NBCC Limited, formerly National Building Construction Corporation Limited, provides civil engineering construction services. The company operates through three segments: project management consultancy, which is PMC, real estate development, and engineering, procurement, and construction, which is EPC. Now, if you were to look at the one-year chart, you would see that the company was on a major uptrend, but of late there has been some dip in the stock prices. The market cap of the company is 21,145.50 crores, which means that the company is a large cap one. The EPS is 4.09, which translates into an expensive price to earnings ratio of 57.44. This is much expensive compared to the industry PE of 44.93. The book value is 18.60, which again is at an expensive price to book ratio of 12.63. The debt to equity is 0.6409, whereas the return on equity is 0.2247. The dividend yield is at 0.69%. The promoter holding here stands at 74.50. The 52-week high is 291.30, whereas the 52-week low is 155.70. Now, one important factor to mention here is that with government's increasing spend on infrastructure, this company should be a major beneficiary going forward of government's infrastructure spends. Now, Geojit thinks that NBCC, being a Navratna enterprise under Ministry of Urban Development, and its business verticals include project management consultancy, engineering, procurement and construction, and real estate business. Now, with its current order backlog of rupees 75,000 crores, which is 12 crores FY17 sales, this company has a strong visibility for next 5 years. Order inflow guidance of rupees close to 30,000 crores for FY18E is keeping the outlook positive. Also, with the execution of large redevelopment, this will improve revenue growth from H2 of FY18E. Now, the final company on the list is UPL Limited, and UPL Limited provides crop protection solutions. The company is engaged in the business of agrochemicals, industrial chemicals, chemical intermediates, and specialty chemicals. The company's segments include agro activity and non-agro activity. The agro activity segment includes the manufacture and marketing of conventional agrochemical products, seeds, and other agricultural related products. The non-agro activity segment includes manufacture and marketing of industrial chemicals and other non-agricultural related products. The stock is available at 768.95 and the code for it is UPL. Now, if you were to look at the 1-year chart, you would see that the company has been on a consistent uptrend throughout the year. The market cap is 39,090.09 crores, which makes it a large cap stock. The EPS is 39.94, which translates into a price to earnings ratio of 19.32, which is cheaper than the industry PE of 48.89. The dividend yield here is 0.91, whereas the promoter holding here is low at 30.36. The book value is 150.85, which translates into a price to book ratio of 5.10. Now, this is a bit on the higher side. The 52-week high is 902.50, whereas the 52-week low is 666.10. Now, if you were to look at the reasons why this stock has been suggested, UPL has achieved healthy revenue CAGR of 16% over FY12 to FY17 with stable EBITDA at 17 to 19%, despite widespread changes in regional weather patterns or swings in commodity prices and currencies. They expect the net profit or PAT to grow at a strong CAGR of 14% over FY17 to FY19, led by new launches, fast-growing geographies, backward integration, and sustained market share gains. Now, friends, please don't treat any of these stocks as recommendations from us. These stocks were not discussed in any research report which was shared by Geojit, but were part of a discussion which were carried out on one of the business channels, and this article was published on moneycontrol.com, and here Vinod Nair, who is the head of research at Geojit Financial Services, spelled out these stocks. We are providing the link of this article in the description below. So friends, please don't go ahead and blindly buy these stocks. Go ahead and do your own research. Also, consult your financial advisor prior to acting on any of the information that is present here. Thanks for watching, and we will see you soon with another video.